Why are we seeing a breakdown in the relationship that you would expect? Crude to rally and energy stocks to move with them. What's happening?
I think a lot of things are happening. Some of it is the stocks have shown evidence all year of sort of skepticism that any of these rallies in crude can really sustain. I think that the stocks are expecting crude to sort of stay in a very tight range. And until that range is really broken, the stocks seem to trade, with a high degree of skepticism. That said, this fall, we did start to see the energy shares produce a little bit of revision momentum, better than expected earnings growth. It does seem that at least the recession is in the past. The companies seem to be fairly rational in their capital allocation.
Yeah.
Thinking about share buyback, thinking about dividends, not necessarily spending a whole lot on CapEx. So I think there's a lot of moving parts going on in the energy sector. Overall, it is an adjustment to a new normal where oil prices seem contained and shareholders are having a hard time really buying in any sort of rally in oil beyond a certain level.
Chad, someone came up to me this morning as we were planning the program and they say, I wonder whether one of these energy companies have really priced themselves out of gains by hedging themselves out of the upside that you're getting in the commodity market. Is some of that playing out here?
Without a doubt, that's also dampening the earnings call for going out in the further years. But let me explain to you what our belief on oil prices as well as commodities. The demand curve will shift up and down based on Chinese policy and credit policy. As you saw in early part of 2016 when oil totally fell apart with all the other commodities, it was due in part because of China and their policy shift. So as you start to see a subtle credit dampening there, not a total dislocation, but a deceleration of credit growth, you could see, of course, a pull down within the oil price.
That's an interesting point. But Tony, we've spent so much time talking about global synchronized growth. This should be a classic late cycle sector. Energy. Is it going to be different this time around?
I would just bring in 2 points, Jonathan,
Please
that
do.
haven't been mentioned. One is, I think a lot of folks believe that Saudi Arabia and their Aramco offering is temporarily or inappropriately trying to lift oil prices. So there's a skepticism that you can have those oil prices maintain their level.
Gina was right
and
again.
I would also, again, 3, don't do it again. I would also say that there's a skepticism that you're going to have this continued accelerating growth.
Yeah.
I even have it because now, as Chad had mentioned earlier, you have monetary policy. The quantitative easing is turning into quantitative tightening, and that's kind of shortening up people's expectations. And lastly, I think we forget how much stock was issued in the beginning of 2016. It's not like you've had a flat supply of stock issued in energy. All those companies that had debt that they transitioned into equity to kind of take the debt off their balance sheet, maybe there's just a heck of a lot more supply as well.